Really excited today to be talking about a couple of different opportunities to get involved in real estate in ways you might not have known of. Could you tell us a little bit about maybe what your background in real estate is and what you do now?
In the business we're in now, which is administration for self-directed IRAs.
With the IRA accounts, how does that play into real estate, right? How do you take one of those accounts? What are the benefits, or how do you use it in real estate?
Sure. There's two different types of accounts. One, of course, is when a person is just getting started out and they have a lower retirement account, or they just start one. Well, if they're going to use it in real estate, they need to understand how to utilize small sums of money to make real estate investments.
What would be like a tip to get somebody to pull the trigger, or just take that first step and go open up an IRA account? All right, guys, welcome back. It's Rodrigo Fondor with another episode of Asheville Real Estate News. Really excited today to be talking about a couple of different opportunities to get involved in real estate in ways you might not have known of. But before we get into that, just want to remind everybody we're on iTunes, Instagram, Facebook, YouTube. So make sure you let us know how we're doing. If you like the content, if you have any questions, let us know. We'd love to try to answer them for you. So, Mr. Hitt, thanks for joining us today.
My pleasure. Thanks for the invite.
Yeah, no, absolutely. Obviously, you're here in Asheville, for those of you who didn't know. I got here in 2009, but it's always interesting to know, what's the story? How'd you end up in Asheville?
In 1999, I was in California, and I had a chance to leave California. Mm-hmm. So I did, and I moved to Asheville to take care of some family business. Didn't plan on staying, but I found out that I really liked the area. So I stuck around, and that's been 18 years.
I came here in 2009. My plan was to be here a year and then go out to Colorado. And when I got here, I was like, well, maybe I just won't leave. So it's been almost 10 years for me. So, obviously this show is about real estate, and could you tell us a little bit about maybe what your background in real estate is and what you do now and how those two correlate?
Sure. I'm still a licensed real estate broker in California. Mm-hmm. Have been since 1973.
Okay.
So I got started with sales and brokerage, and I owned several real estate companies and a couple of mortgage companies, and I owned some what you guys would call closings, but they're called escrow companies in California. So I've been in the real estate business for a very, very long time, which helps with that background to be able to be in the business we're in now, which is administration for self-directed IRAs. Mm-hmm. What that means simply is that we administer non-traditional assets. Yeah,
so I know one of the first times I heard you speak was probably when I was like a year into my career in real estate. I remember hearing about IRAs, and it was like, he was talking about all these good things. I was like, I don't even know what an IRA is. So for anybody who might not be well versed with what an IRA is, and then self-directed IRA, can you just give us like the very dummied down version just to keep us all on the same page?
Everybody's heard of Charles Schwab. They're a custodian for IRAs. Mm-hmm. An IRA is something you set up for your retirement account, individual retirement account. And when you do that, typically you're going to become aware of a securities firm like Schwab or Merrill Lynch. Mm-hmm. And they only allow you to invest in traditional assets like securities, mutual funds, bonds, etc. A company like ours, American IRA, does not do anything with securities. We simply deal with non-traditional assets such as real estate, gold, private lending, private companies. Okay. And the client has to pick what they want to invest in. We don't give any type of advice, and we don't have any type of products to offer them. Right. We are termed a passive custodian for assets, non-traditional assets.
Mm-hmm. Okay, no, that's a great summary. And so, when you're talking about having that self-directedness, with the IRA accounts, how does that play into real estate, right? How do you take one of those accounts? What are the benefits, or how do you use it in real estate? And could you speak on that a little bit?
Sure. There's two different types of accounts. One, of course, is when a person is just getting started out and they have a lower retirement account, or they just start one. Well, if they're going to use it in real estate, they need to understand how to utilize small sums of money to make real estate investments. Mm-hmm. It could be options, it could be tax liens, it could be
to grow the fund, right?
To grow the fund.
Yeah.
People with a larger sum of money, what they typically are doing is they're buying rental property for cash flow. Mm-hmm. They're making an investment in a private company, mm-hmm. or they're buying gold. So those are the two different types of processes. That just because you have a large account doesn't mean you can't buy tax liens. It's only if you have a smaller account, you need to make it grow, so you need to use more leverage.
You need to be a little bit more creative, right?
A little bit more creative.
Yeah, absolutely. So as we're talking about IRAs in real estate, how long have you been doing with American IRA, which is obviously
Since 2004.
2004.
This is their 14th year.
And I just, kind of a little bit deviating from that, but I'm sure it's been really interesting to see the way different people use their creativity or the flexibility that having a self-directed account goes, right?
Oh, absolutely.
And maybe what would be somebody who's thinking about it and you may be listening to us now and they're like, that sounds interesting. What would be like a tip to get somebody to, pull the trigger or just take that first step and go open up an IRA account? Or
That's a good question. What I like to tell people when I'm talking to them is we have a client that has been with us now for about 10 years. He started with $6,800 and has probably $500,000 now making that money grow. Okay?
Right.
Matter of fact, we have a great story written on him called, it's a David G story.
Oh, okay.
What I would suggest that somebody does is first get started.
Mm-hmm.
That's the most fundamental thing. And I would even say they don't even need to get started with us.
Right.
Okay, because our industry charges fees.
Mm-hmm.
Okay, the Charles Schwab's of the world, when you open a Roth account, for example, with them, that's a Roth IRA. It's an absolutely tax-free account. Then they're not going to charge you a fee. So just get started, put $100 in there, get comfortable with the investing part, and then let it and make your contributions, let it grow, and then become more proficient in the real estate aspect. And when you're ready to move it to us, and then you can start self-directing. That way you can cut down on the fees and grow your money.
That's a good tip,
get started. Okay?
Well, it's always right. It's like best time to plant a tree was yesterday. I know it's like a famous proverb or saying I always hear. So it took me. So I opened my accounts last year, so I'm only a year and 2 months in. So and it's definitely like, I should have done it earlier.
Exactly. Well, that's the comment we generally get. Is,
Yeah.
I wish I would have known about this earlier.
Yeah.
And it's never too late.
Mm-hmm.
If you're at your age, you have a multitude of years to compound.
Right.
At my age, you have less years to compound, but you may want to diversify, which is the other reason that people want to. The stock market is going crazy right now. The stock market and real estate both are subject to the economy. There's no doubt about it. But putting all your money into the stock market and not diversifying into some form of hard assets is not necessarily the best strategy.
Right.
Okay? You need to be diversified in all fronts.
Mm-hmm. Yeah, no, absolutely. So when we're talking about diversifications in the market and real estate, it seems a little overwhelming, right? So when you're saying get started, when you're saying it's like maybe just start putting that money away in the account and not necessarily doing anything with it right away, or just taking get used to setting money aside and going through those motions and then take the next baby step?
Well, savings is like any other habit. You keep doing it and pretty soon you just believe that you must do it.
Right.
So I'm only suggesting the securities route because many times a person does not know what they can do in real estate. So until they learn that they can buy an option on $1 million piece of property with $1,000 and how to do it and what the paperwork looks like, and then turn around and sell that $1 million piece of property for $1.1 million to a developer by being savvy and make $100,000 on $1,000. That's how you build a small account.
Right.
They need to have the idea that they have an account and they start putting their money away. Okay.
Yeah.
So that's just my theory.
No, that makes sense. Once you get momentum going, things happen. So just wrapping up though. Well, what's a good place? I'm sure your all's company here has good resources on just doing general reading and things like that. I know, first time I heard you speak was at a conference through CREA, or the Carolina Real Estate Investors Association. But what about online? Are there any, newsletters or articles or things that would be a good starting point for somebody to be like, my interest is piqued, now what?
Well, of course, on our website at AmericanIRA.com, we've got great material, lots of blogs, lots of educational material. There's a gentleman named Ed Slott, S-L-O-T-T. Okay. He has a website that you can go on to, and it talks about just in general rules and regulations of IRAs. So that's a good resource. There are a multitude of books out there that you can get to learn more about it. Matt Sorensen has a good book out.
Okay.
IRA investing. You can look that up.
Okay, that's awesome. Thank you. I'm gonna switch gears just a little bit. I'm gonna put you on the spot, so I hope you're okay with this. So we did an episode. It was episode 25. We released at the very beginning of January, and we were just doing market predictions for 2018. Obviously, you'll see a lot of people who are doing this full time, or at least very aggressively. You've been doing this longer than I've been around, and so what is the? Do you I'll put a prediction on what happens with the market here in Asheville in the next, say, 12 months?
I think I can. I believe strongly that the market's going to be excellent for the next year.
Okay.
Of course, Washington has something to do with the market.
Right.
Okay. If the way the economy is going right now, it should continue to do well and continue to grow. The consumer confidence is up. The interest rates are staying stable. You've got the what might call the perfect storm: a rising stock market, a rising real estate market. You have deregulation. You have more money in the economy through the tax cut. So it should be a solid couple of years. So that's my prediction.
Okay.
And in fact, not only is it my prediction, it's what I'm basing my particular plans on in the next couple of years.
Awesome. Thank you so much for sharing.
No problem.
All right, y'all. Make sure if you're interested, don't forget to check out AmericanIRA.com. They're local here in Asheville, so that's always a nice thing. And stay tuned for the next episode. We'll see you there, and let us know on iTunes, Instagrams, where we're hanging out a lot, how we're doing. Check out our videos. Thank you.
Thank you. Thanks for having me.
Absolutely.